Hello folks, and welcome to the Hot Sector Report from May 27, 2007. What we'd first like to do is welcome you all back to the Hot Sector Report, and we'd like those of you that have been following the Hot Sector Report will notice that this is the first one done in video, and we hope to do every weekend Hot Sector Report in video from now on. What we're going to do today is a little different. Usually what we've been doing is concentrating on hot sectors that are breaking up or breaking down, shorts, longs, in various sectors. What we like to do every once in a while is focus in on past sector reports and find out, well, what have they done since we made the call, whether it was a breaking out sector or a shorting sector. And that's what we're going to do today. So what I'm going to do first is focus in on our hot sector report from May 19th, 2006, as you see here. And what we're going to do is just go over what we said here. And we basically focused in on the market stocks, and what we mean by market stocks is the financials, the investment firms, Morgan Stanley, you have JP Morgan, you have Goldman Sachs and Merrill Lynch, and so forth. And what we focused in here was the Goldman Sachs, JP Morgan, Chase, and Merrill Lynch. Now the reason they're referred to, especially Goldman is referred to as the market stock, is because in general it dictates what the market's done. Ever since Paulson got in the White House basically to run the Treasury and our foreign policy, that's become the leader and basically been dictating where the markets have gone. Now what we noticed in this hot sector report, May 19th to May 26th, was that these weekly charts were showing many negative divergences. Now let's take a look at these divergences just quickly before we get into it, and you guys will see what we're talking about. We noticed the RSI had a negative divergence on the weekly, and you see this is so key because as the market's pushing up, you see a negative divergence forming. Not only that, but you have a negative volume divergence. So the buying volume is so tiny, but it's still pushing the stock up dramatically on the Goldman chart. You have a negative MACD here, and as well as an FTO, the fast stochastics here. You have a negative as well. Well, flat more than anything, but just not advancing like the market, the stock's been pushing up. Now, we all know that this market's been in an unbelievable bull run. We've seen basically new highs almost every day in the Dow, and the NASDAQ reaching, the S&P even possibly. It just touched the new record close high. It never closed there, I don't believe, but just unbelievable moves in the market. And you can basically attribute this to a couple different things. One is a credit bubble, and that's an obvious one. There's just so much liquidity out in the market that it's feeding these LBOs, these leveraged buyouts and M&A, merger and acquisitions, left and right. And it's causing major kind of a bubble forming with so much money out in the market. And this is just why these stocks are being bid up recklessly. And you're having buyouts for double the value of these stocks and so forth. So this is one of the reasons. The other reason you can look at is a world economy. Well, people all of a sudden are noticing China. China's up something like 80% for the last year. It's a couple 100% for over the last few years. You're having all these emerging markets just taking off. And what this is causing is again a bubble in the US market as well, following in the footsteps of these smaller markets. So again, as we were looking at the Goldman chart here, you can see it's way off the 20 here, up here, and again this is on February, this is on May 26th, the 19th through the 26th, and this chart was the week of the 18th, so that Friday. And what you're seeing here, again, is a push up in the market, but negative divergences all the way down, and a flat divergence here. Now, again, looking at the JP Morgan Chase, again, you're seeing negative. Volume not as bad here, because you have a couple of big spikes there, but again, negative. Flat, and then a negative, and then slightly up. And again, on the Merrill Lynch chart, the same thing. You have a negative, big negative here on the RSI. But again, the chart is not near at its high. But either way, you're talking about negative divergences through these market stocks. And this is why, in many reasons, we look at a weekly chart, because it gives us a broader time frame, all right, a bigger picture of things, and that's more the accurate picture. So what is this telling us? Well, it's telling us a couple things. If these are the market, then the negative divergences are dictating that we're going to have a pullback in the markets very soon. Now, it doesn't have to be a drastic pullback, as we don't think it will be a drastic one, but it will be a pullback nonetheless. Okay. Now what we're going to focus on here is the chart of Goldman now. And this is actually the weekly going back, and then I'm going to flip right into the now chart. So again, we're looking at the negative divergences here, which we just looked at before. Alright, and keep focused on these. And this is the weekly chart. So you see this massive push up over the last few weeks in the chart. Now let's look at what happened since we made this call here on a short last week. It's over a week ago now. Alright, let's see. Okay, here we go. Look at this fall off here. Right down to the 20 MA. Now that's key again. And what told us this? Well, the weekly negative divergences that we are noticing in the market. So as you can see on the Goldman, we were right on, dead on in the Goldman chart. Now let's look at the JPM. This is the weekly from the hot sector report a week ago. And again, we had that topping pattern here. We had the negative divergences, and what happened afterwards? Bam. Look at this rollover. Alright, now what's even scarier about this chart is it went right through the 20, and it looks like it's got to test this 50, the 50 right here. Alright, so it's very likely that we're looking at a move down to the 50.5 area of the JP Morgan Chase and Company chart. Alright, next let's look at the Merrill. Again, this is the weekly. We saw negative divergence. We saw a negative, not necessarily just a negative chart pattern because it hadn't reached its high, so you possibly were looking for a double top here. Alright, if it got that double top, you'd have to, with these negative divergences, look at a dead short here. Alright, again, negative, negative, flat. And what happened? Bam. We got a roll over here. And again, this is the daily, so we're not looking at the weekly again, but we're looking about what happened in the near term over the last week based on our calls on the negative divergences. So as you can see, we were right on. So what I'm going to do here is just go back to the GS chart, and we're just going to talk about gains. When we made this call, the stock was trading at $230.34. Now it is trading at $225.53. If we had shorted it as we suggested in that hot sector report, we would be up $4.81 or 2.08%. Alright, now let's look at the JPM chart. The JPM chart, on that Friday, at the close, when the hot sector report was done over the weekend, you had a 52.54 price. The following week, after that call was made, 51.64, or a 90-cent gain on the short, and a 1.71% return in 1 week. Now let's go quickly to the Merrill Lynch chart, and we see a nice rollover again right here. And if we had done that short, as we suggested on that Friday, 94.17 was the price, and at the end of that week after we called that short, 91.85, or a plus $2.32 on the short, and a 2.46% return. So as you can see, this analysis does work, and we all encourage you all to join the Swing Trade Alerts. For our alerts, we won't obviously tell you in the free hot sector report what alerts we did put out for these stocks, but needless to say, they were out there, and those of you who were able to do it did very well. We all would like to encourage you to join the Swing Trade Alerts. We have a sale going on now till May 31st for $99.95. Better jump on board right away. After that, the price will be going back up. We did a little springtime sale there. So again, as you can see, great moves in the chart on the hot sector report calls, right on the money, and we will continue to look back at former hot sector reports to focus in on how we've done on our calls. Thank you very much for joining in, and we will see you next week in the hot sector report.